Welcome to the first series on this channel. So, my name is Nero, and welcome to my channel again. So, this first series is going to be named The First Things Every New Accountant Must Know. So, if you know you are starting your journey, or you're a fresh graduate, or you want to transition into the accounting career, these are basics that are not being taught in schools, and it is picked up from my life experiences. So you're actually hearing what happens in real workplace, not just theory. So in this part one of this video, we're going to be talking about accounting is about controls, not just entries. Debit and credit is not enough. It is good to know debit and credit. Anyone can learn debit and credit, but there's a reason you are being hired. Accounting is more than just knowing I debited this and I credited this. Accounting is about knowing what was behind that transaction, who approved the transaction. Can I protect the company's money? Can I help the company prevent losses? Can I help the company prevent fraud? Can I help the company prevent errors? Those are the basic questions you're supposed to ask yourself. So, controls. What are controls? Controls are systems and rules that are put in place to record a transaction. There are things you're going to ask for you to record a transaction, or for a transaction to actually go. It has to be approved, documented, recorded, and easily traceable. Now we're going to ask ourselves, what are accounting controls? Accounting controls are rules, procedures put in place in order to record a transaction. There is a reason why you are being hired: to safeguard company's assets, accuracy of records, prevent fraud and misuse of funds. Now we're going to break down the key control every earlier career accountant must understand. Number one is authorization. What is authorization? Who approves the payment? There are different stages of authorization. So if you know you're starting your career as an accountant, just know that there is something called authorization. Different people authorizes payment. As an accountant, you might not authorize any payment, but just know the different levels of people that authorizes payments. There is someone who can approve the payment, their approval limits, and their approval hierarchy. For example, there is a limit a manager can approve a payment, and also there are some transactions that may require a director's approval. Let me give you a real life scenario because of what has happened to me. So in where I've worked before, the manager has the right to approve payment from 5,000 naira below. Anything making that transaction 5,000 one kobo, director approval is needed. These are the basic things you are supposed to put in mind and know. Anything making that transaction pass 5,010 naira, a director's approval is needed. I've also worked in a place that from 10,000 naira below, the manager can approve the payment. Anything making that transaction 10,000 one kobo, it needs the approval of the directors. So this is what I mean by approval limit and approval hierarchy. I hope you understand what I'm saying. So we're going to look for the next. In authorization, there are certain things that you should look out for. Number one, you look out for signature. A signature has to be constant. You're an accountant, so you have to have that keen eye for details. You have to look out for emails. Yes, sometimes the directors might not be physically present to approve those transactions. They might send a mail, and you have to look out for the mails. It should be an official mail that you are conversant with, then approval stamp. Some companies make use of that, especially the bank. And also you can see approved regards the director name. So you know it's from the director. You don't need to call the director. You know it's from the director. These are things that you should look out for in authorization. Number two key control every new accountant must know of: documentation. As an accountant, you should be able to properly document invoices, receipts, payment vouchers, contracts, bank statements, invoices. Invoices, some suppliers or vendors, they give quotation. You can make use of that. After that, after doing those services, they give receipt. Also know, as an accountant, you must always prepare a payment voucher. That payment voucher includes the bank, the description, where it's going to, who is preparing it, prepared by, approved by, approved by. In different companies you work for, there are going to be different signatories that approve payment. So some companies, the least that can approve a payment is two. So you are supposed to know the two signatories that are supposed to approve a payment. They might be different. They might say, okay, from these directors, director one, two, three, four is able to approve payment. Five, six, seven, eight does not approve payment. Nothing concerns them with approval. So by the time I see director five signature on that payment voucher, it is questionable. I will have to ask you, don't you know Director 5 doesn't approve payments? So these are things you should know of. Then documents are proof that a transaction actually happened. The amount is correct. The expense is legitimate. Now, in this documentation, I want to mention a mistake a lot of new accountants make. You record transaction based on verbal instruction. Never do that. Just because I said, give this money to this person, I didn't give you any documents or whatever, and you recorded it. No, it is wrong. Number one red flag, please don't do that. Every document, there must be a supporting document for you to record a transaction. I know sometimes we might get familiar with our workplace and all that. Take this 1,000 and give to this. Okay. But make sure before the end of that day, give the person a document or do it immediately. Can you sign this that you actually asked of this money? It's very important. Please don't make the mistake of doing that because documentation actually saves the company and actually saves you if you don't know. So the third key control every new accountant must know is segregation of duties. What does segregation of duties mean? Segregation of duty means that not one person handles a transaction from start to finish. I hope you understand what I'm saying by that. So, as an accountant, you should be aware of role overlaps and raise concerns where duties are not properly separated. This shows professionalism and awareness. Whoever initiates a transaction does not prepare it. Whoever prepares a transaction does not check it. Whoever checks a transaction does not approve it. Are you understanding this segregation of duties? It is important. Control is important. It's in order to know whether some errors are hidden. You might perfectly post entries, which is good, but if you don't know about controls, there are problems that are actually hiding and the company is not aware of, which is bringing down the company. So I hope you understand what segregation of duty means. Now we need to go to the fourth audit trail. You will say it is not train, TRAIL. Now, what does audit trail means? Audit trail means easily traceable documents. If an auditor comes, like if they ask you what was this expense made of, you can be able to trace it. That is why I said easily traceable. So, how do you trace documents? We trace documents from receipts, payment vouchers, ledgers or cash book down to the financial statement. All this lands in the financial statement. Strong audit trail. Strong audit trail builds trust, makes auditing easier, reduces stress during review. Note: so as a new as a beginner accountant or new accountant, always document properly and reference them clearly in your records. This is going to save you a lot of time and a lot of stress. Why control matters more than entries? Let me just make these facts known to you. Perfect entries, balanced accounts can still lose money due to poor control. This is why accountants who understand control early are more trusted than those who knows about theory. So here is my final advice to that new accountant. Don't rush to post entries. Always ask questions. Understand the process behind each transaction. Focus on accuracy and not speed. When you master controls early, you become more than just a junior accountant. You become a trusted professional. In conclusion, accounting is not just about debits and credits, it's about control, accountability, and protection of resources. Thank you for watching. If you found this video helpful, please drop a comment and also like, subscribe, follow, and share to another new accountant. See you in my next video where I'll be discussing about understanding the business before touching the accounts. Thanks for watching.